Hey guys, welcome back. Today I want to talk about everything that you need to know about the Elliott Wave Theory. The Elliott Wave Theory is a financial theory that is used in technical analysis, used to describe the price movement in any financial market. Now, first of all, let's talk about how this theory works and what is on the back end of this theory. This theory was discovered by Ralph Nelson Elliott, and after he observed recurring patterns in a lot of financial markets for over 20 to 30 years of past data. Now, this theory was developed back in 1930. Of course, at that time, all the volume and every movement of the market was not available. The only market data that was available at time was yearly data. So Nelson Elliott formulated those data into monthly charts, and then after that he observed certain kind of patterns, and based on those patterns he made some predictions which proved out to be right. And since then people have been using Elliott wave theory in their technical analysis as a fundamental tool. So the Elliott wave looks like this. It consists of two phases. Okay, the first phase is the impulsive phase, in which the market moves very impulsively in either bullish or bearish direction depending upon what is the current trend in the market. And then the second phase is the correction phase, as we can see, which looks like this. Now this impulsive phase is very interesting because within each impulsive wave there are 5 waves inside this impulsive phase. The first wave is this one, then there's second, third, fourth, fifth, and within this impulsive wave, each impulsive wave again constitutes or consists of 5 waves. So we can keep breaking it down further and further, and it works on all time frame. For example, if you're discovering this Elliott wave pattern on a 1-day time frame, then at hourly time frame you will be observing that again at this third wave at the same points, there again at hourly time frame there is going to be another impulsive wave of 5 waves of the Elliott wave. So in the first wave the market is moving in the bullish direction, and there is the formation of these waves: the first wave, second, third, fourth, and fifth. And there are some rules that have to be followed while this impulsive wave is forming. The first rule is that the wave 2 cannot retrace more than 100% of the first wave. For example, if we take the Fibonacci retracement tool and we draw the retracement for the wave 1, so this wave 2 cannot retrace more than 100%. So this wave 2 cannot go below this wave 0 level. Okay, so from the starting point of the wave 1, so it has to be somewhere around 50 or somewhere around 60. So it cannot go below 0 or the starting point of the wave 1. That's the first point that you need to consider whenever you're detecting the Elliott wave. Now the second point is that the third wave can never be shortest of the waves 1, 3, and 5. If you notice, this wave is in the bullish direction impulsively, and there are these impulsive waves, then there is retracement, then an impulsive wave, then retracement, and then again there is an impulsive wave on the fifth wave. Now the theory says that the third wave can never be shortest, so which means that the third wave, this wave 3, will always be bigger than the wave 1 and wave 5. And this shows that during this phase the market will be giving a lot of impulsive moves. Okay, and then the last point is wave 4 can't go beyond the third wave at any time. So here you can see that this is our wave 4, and this cannot go beyond third wave at any time. What this means is it cannot retrace back till this starting point of the wave 3. So these are a few points that you need to keep in mind, and as I already described, that within this each wave or each impulsive wave of the impulsive phase, the first phase of the Elliott wave, there are again 5 waves, and this keeps on breaking down and down at any time frame. Now after this impulsive move, there is always a corrective move or correction in the market, and that correction is represented by the waves in the form of A, B, and C. Now once the C point is reached, the Elliott wave pattern is complete, and now again the market will start to form another Elliott wave. So according to the Elliott wave theory, the market always moves in the form of Elliott waves. It will be moving impulsively in one direction, then there will be correction, then again there will be another impulsive move, then correction, impulsive move, correction. Now this is when it's moving in the bullish direction. If the market was moving in the bearish direction, then that it would be moving in the impulsive move, then correction, then impulsive move in the downward direction, then correction. So this is how the market moves according to the theory of Elliott wave. And a lot of people rely heavily on the Elliott wave theory to make their to do their technical analysis. Now let's go ahead and look at an example of the Elliott wave pattern on the charts and how you can detect it successfully. So for example, if you go here and zoom in a little bit, we can see that there is the formation of an Elliott wave, because this is going to be our starting point. Then this is the wave 1, 2, 3, 4, and 5. So till now, our first phase of the Elliott wave pattern, that is the impulsive phase, is complete. Let me just change the color so that you can see it a little bit better. So now you can see that this is the wave 1, 2, 3, and 4, and 5, and it is following all the theory that we had discussed. The first point was that the wave 2 cannot retrace 100% of the first wave. As you can see, it is somewhere in the middle. The second point was that the wave 3 can never be shortest of the wave 1 and 5. And the third one is wave 4 cannot go beyond the wave 3. So all those points are satisfying here. And now let's talk about the second phase of the Elliott wave, that is A, B, and C. So from here, we can see that the market is going here, here is this B wave, and then here's the C wave. So till this level, the Elliott wave pattern is complete. I'm going to show it to you how you can use it in your trading. First of all, let me show you another example so that you can understand it completely, how you can detect it successfully on the chart. So here on the chart, we can see the formation of another Elliott wave pattern that starts from here. So for example, if we take the Elliott wave here, and this is the wave 1, 2, 3, 4, and here is our 5. So these are the impulsive phases of the wave 1, that is impulsive phase. And then again, as I showed you in my earlier theory, that each wave of the Elliott wave pattern consists of even more impulsive waves. So for example, we can go here, and from here we can see that this is the 1, 2, 3, 4, and 5. So let me just change the color. So now within this impulsive phase, there is again the formation of another impulsive phase of Elliott wave, and then there is this retracement, that is A, B, and C. Okay, so these are the 4 points. So within this Elliott wave, there's another Elliott waves, and this is how the market works, and these are recycling patterns that are happening all the time in the market. So if we look at the broader picture, if we look here, we can see that again there is from here the wave A, B, and C are forming from here, A, B, and C. Now let's go ahead and talk about how you can use the Elliott wave pattern in your trading. So once you have detected the Elliott wave pattern successfully on the chart, for example, here we can see that this is the Elliott wave pattern. Now, of course, when the market is moving in the real time, you won't be able to see this in like this forward market. So let me just remove this. So for example, till now, we can see that the 5 phases or the impulsive phase of the chart or the pattern is complete. Now we are expecting the market to go downward in the bearish direction. So during this phase, at the end of this impulsive move, if the market is moving in the downward direction and we see any candlestick pattern or a chart pattern that identifies or tells us that the market might be headed in the bearish direction, we can trade that pattern very confidently, because from our Elliott wave theory, we already know that the impulsive phase is complete. Now market is in the corrective phase, so it's moving in the bearish direction. So if I forward play the market here, so here you can see that there is the formation of this bearish pin bar, and this bearish pin bar shows us that now the sellers are in full control of the market. And with this candle, the formation of this bearish candle and breaking below this bearish pin bar, the bearish momentum is confirmed. So we can take a short position at the close of this candle here, and we can put our stop loss at the high of this pin bar, and then here we can target our 1.5 or 1 risk to reward ratio. So for example, if we target 1.5 risk to reward ratio, and if I forward play the market, you can see that our take profit level was hit here, and from here we can see that the market is making these first, second, and third waves for our Elliott wave theory. For example, this is the A phase, B, and C. Till this point, the market has retraced as it was supposed to. So during these phases, we can use our other tools and use this Elliott wave theory as a confluence for taking our trades. So this is how you can trade using the Elliott wave pattern. Now, this is how you can do it manually, but detecting Elliott wave patterns manually is a very tough ask and it takes a lot of time. So now let me show you how you can do it automatically on your chart. So there is a built-in indicator on TradingView that you can use. You can go towards the indicator tab, and inside here you can go towards the technicals, and in the auto you can go towards the Elliott wave chart pattern. And this is very cool because it detects Elliott wave patterns automatically on the chart. So if I just zoom out here and let me just go to another currency pair. So for example, if I go to USD JPY and let's see if it finds any Elliott wave pattern here. So let's go to the past. So for example, here we can see that the indicator is detecting this Elliott wave pattern. And here you can see that there is a wave first, second, third, fourth, and fifth. So till now the 5 phases are complete, or the impulsive phase is complete, and now market is in corrective phase. So according to Elliott wave theory, the market is supposed to reach this level. So and another very cool thing about this tool or this indicator is that it gives you the prediction of where the completion of the correction phase will end. For example, the price is predicted to reach this level for the completion of the C wave. So we can go towards the indicator settings and we can also turn off the projections. For example, if we turn it off, we will not be able to see these projections, but it's always helpful to get an idea about where the market will be headed or might be headed. Okay, so using this indicator, you can automatically detect the Elliott wave patterns on the chart. And also this indicator is also showing you that within each phase there's again the formation of other Elliott waves. For example, within this first phase there is again formation of 1, 2, 3, 4, and 5 Elliott waves. Okay, and again in this phase here as well there's the formation of 1, 2, 3, 4, 5 impulsive phase, and during the retracement this is the corrective phase. So there is a formation of this wave A, B, and C. So this is how you can use this indicator to detect the Elliott wave patterns automatically on the charts and trade them. I hope you're able to understand how the Elliott wave theory works and how you can trade it in your technical analysis. And I think it's a very cool theory, and it will give you a lot of edge over other traders if you implement it using it as a confluence for your trading strategies and using it as a measuring tool to detect whether you are taking the trade in favor of your Elliott wave pattern or against it, because it's always better if you are in favor of the market or in favor of the Elliott wave theory, because it is almost all the times right. And you can also use this projection way or projection method to project where the price might be headed. I hope you like this video. If you have any questions, please comment down below. I would love to answer them. Also, don't forget to like, share, and subscribe. See you guys in the next video. Thank you.